Here we go. Okay, Sashi, welcome.
Thank you.
How's it going?
Things are good. Things are good. Things are busy, but in a good way. So, excited about coming into the end of the year already, if you can believe it.
Time flies. Actually, we obviously joined this session a couple of minutes early just to figure out the logistics. I haven't told you then, but I will be telling you now. This also is a huge day for me in my life, not only because I'm having this moment with you, but approximately in 8 hours, I will be jumping on a flight to go back to my home country, Turkey. And, I'm relocating actually. I came to US 4 years ago for grad school. One thing led to another. Today marks the day that that journey is pausing for a while. I'm excited, but I'm actually even more excited because we are having this. Yeah.
That's amazing. My husband and I went to Turkey a few years ago, and I have to say they are some of, beyond the amazing food, they're some of the warmest, kindest, most generous people that we've come across. So that doesn't surprise me at all. Knowing you, you're a great representation of Turkish people. So
You are so kind. Thank you so much. The reason I wanted to start with this is because what brought me to New York initially, almost 4 years ago, was my grad school experience at Columbia University. That experience was so lucrative in terms of all the gifts Columbia and New York had given me. And one of those things was actually the fact that that journey introduced me to Project 2.8, an accelerator within Columbia Venture Community that you founded. That accelerator introduced me to individuals like yourself, all these other very impactful, change making women entrepreneurs, ecosystem leaders. And, just as part of the domino effect, one thing led to another. And here we are having this conversation. Today, I want to spend the next 30, 40 minutes to first get to know who you are, then learn about what actually led you to work in venture. Because, yeah, you've been in the space for long enough, but you also had a lot of different journeys within different business endeavors before that. So I'm also a little curious, what led your life to find yourself at Level Up today? And then we will go and dig more about the very special nature of Level Up, because I know for a fact that this organization is not only focusing on any founder out there. There's a little specific sauce that really is valuable to me personally, but I bet to a lot of other people who will be listening to this. But enough about this opening speech. I want to just ask you directly, who is Sashi?
yeah, yeah. So in terms of professionally, I am a managing director at Hearst. I'm the head of Level Up Ventures. We're an early stage investor in tech startups founded by those who have experienced barriers in accessing capital. But my path into venture wasn't really the route that most VCs take. I started actually in structured finance, which is very different from venture. I was at Credit Suisse out of school, and then I launched my own company actually as a founder. I'm not sure if you know that. And now I lead a venture arm inside a 100 and really interesting journey. I think, for me, I think what makes me a different kind of investor, or what I think has made me a stronger investor, is the fact that I kind of had this very varied journey from all of these different places. But, what I would say is, even though I've kind of had all of these different experiences, I've kind of noticed patterns that came up in all those different parts of my life. And one of the most compelling patterns I kind of recognized is like the most compelling opportunities often come from those places that you don't think to look, right? Or places that people have intentionally disregarded. And when I got to the world of VC, what I realized is that means kind of overlooking founders who didn't fit that Silicon Valley mold, whether that's women founders or founders of color or people building outside of the big hubs, right? San Francisco, New York. The market kind of continues to systematically undervalue those founders, which ended up creating space for founder investors like me who are kind of willing to take a closer look. And in my mind, that kind of has given me an edge. Also, varied life experiences help you to better understand these different startups that kind of come your way because, on any given day, I'm seeing startups from multiple different areas, sectors, et cetera. And so having a perspective maybe not a very deep understanding, but having a perspective on every startup that I meet based on my lived experience has been incredibly helpful. So yeah, that's kind of like where I came from, how I got here, and how I think about venture investing.
That's beautiful. I think my next question is also touching a little bit about how you approach this. All your, previous, like some of the speeches you gave, some of the things you published, you often say capital is not enough. And I think, this is one of those things we repeatedly hear, repeatedly see. And even my time at Columbia School of International Public Affairs,
Hmm.
in most of my courses, the focus was always in underrepresented communities or emerging markets where capital was literally not enough and infrastructure was, in some cases, even more critical than capital. Infrastructure matter, networks matter just as much. And
Yeah.
I'm just curious how Level Up Ventures rethink this idea of capital is not enough in today's world, especially from a lens of being a corporate backed innovation hub.
Yeah. So maybe first I'll start by giving you my spiel about CVC and how that's different. So corporate venture is really a unique animal in a lot of ways, and I think it's becoming more and more important. So you've kind of got traditional venture capital, and then you've got corporate venture capital. It's different in a lot of really meaningful ways. First of all, corporate venture capital, we have one LP, our parent company, and so you've got capital continuity, but it comes with it a bunch of, a host of things that can be really, really beneficial to companies, to startups. So, brand recognition, if you happen to be raising from a well known brand that's operating in the same industry in which your startup is operating, that can bring a lot of credibility. But as a corporate, we also bring with us things like institutional knowledge, established distribution channels, operational expertise, access to networks. And so those things are all things that are part of kind of the corporate DNA. And as part of a corporate CVC, we're able to bring that to the startup. So when I talk about, value add, it's a little bit different than maybe what other venture firms talk about when they're talking about kind of like, financing and cachet and advice. Hearst has over 370 businesses. You just said, it's a huge media company. The truth is that Hearst is actually about half of our business is media. The other half actually is, healthcare, transportation, financial services, et cetera. And so it's actually a very diverse business. And so what we've tried to do is kind of take the expertise from across our 370 plus businesses across those areas, and kind of bridge that access, for our founders into those ecosystems. And I think, based on who we work with, right, these founders that have experienced barriers to accessing capital, that matters a lot. Even if you didn't go to Stanford or if you didn't work at Google, you often don't have the same network or access to those warm intros. And so what we're trying to do is, collapse that gap, right? We introduce you potentially to your first pilot or put you in front of decision makers who would otherwise be out of reach. And that's kind of validation that you can't buy, right? You can't get that with just giving a founder cash. And so, I'm really excited about what we're building, and I'm really excited about CVC in general because I think that model, corporate startup collaboration is really the future VC in a lot of ways. We're already seeing CVC kind of evolve from passive check writers into real acceleration giants. And I think the best CVCs don't just invest, right? They shorten the sales cycles, they validate products, they bring customers to the table. And for us, it's about making sure that these founders in particular don't just get that capital, but they also get the kind of traction that helps them to kind of leapfrog ahead and make a meaningful change in their trajectory.
I think one thing that always fascinates me is also the very unique nature of, CVCs and all these early stage founders and startups that they've been backing, building those relationships. Because just like you pointed out, I personally very much believe that the corporate world with years and years of history and partnerships and business knowledge have a ton to, provide to an early stage business. But I
Mhm.
bet dynamic world of tech making and startups, that dialogue probably also teaches some things to the corporates as well. So it's probably like a two-way street, I assume.
Absolutely. I completely agree with you. That is very much the case. In fact, I was on a panel the other day and we were talking about, approaching corporate venture capital for investment. And I was sharing the fact that when you take money from a corporate, a lot of founders, I think, assume that they're giving you the money because they see you as a potential acquisition target. But the truth is actually that only about 2 to 4% of the corporates that invest in the startups end up acquiring those startups. It's 2 to 4%. It's very, very low. I was surprised when I saw that. And the reason is, I mean, we know all of the benefits for founders. We just talked about that, but the other side of the coin is what you said, exactly what you just talked about, right? Like there are so many benefits to the company as well, to the corporation as well. Like every interaction, every pilot, every engagement is a window into future markets, right? And that's incredibly valuable for corporates.
Before this call, as I was prepping, learning more about Level Up, Hertz, yourself, I obviously started initially by looking at your LinkedIn profile. And I was just, reading your personal bio. And in one of those paragraphs, you have this sentence that I want to just read here in the session. You say, quote, "I'm building systems that close funding gaps and unlock alpha at the earliest stages." And, we obviously heard the term alpha in many different contexts. And in the world of finance, alpha obviously means something else. But
Yeah.
I was just curious, you coined this phrase, alpha in the funding gaps. What does that mean?
Yeah, no, thanks for asking. That phrase really came out of my own journey. As I mentioned before, I started structured finance where my job was to kind of model risk. Later as a founder, I experienced what it was like to be underestimated when I was raising capital. It was not a pleasant experience at all. And now I'm leading this corporate venture arm, and I kind of see firsthand how the industry kind of defines what's venture backable. And so when I say alpha in the funding gaps, I'm really pointing to the opportunity that comes from places that most of venture isn't looking, right? The data shows that less than 3% of all venture financing goes to Black, Latino, and women founders combined, 3% combined. And it's not because the talent isn't there, right? Like you and I both know that firsthand. It's because the system is pattern matching against a very narrow archetype of what a founder should look like. And, as I mentioned before, what I've kind of learned on my journey is that some of the strongest opportunities are coming from those very gaps in funding, those gaps in understanding entrepreneurs who don't fit the mold, but who are solving very real, high friction problems that they've often lived themselves. These founders tend to be more capital efficient, deeply embedded in their marketplace, and yet still are undervalued by traditional venture capitals. So when I say, alpha in the funding gaps, I am not making a moral case. I am very much making an investment case. I am a finance person. That is my background. These founders are the ones building like very resilient companies in markets with massive upside. And that's where that outsized return lives. And so, I think, again, for investors like me who are willing to take this closer look, that's where they're going to find their edge. And that's kind of what I mean when I say alpha in the funding gaps.
Well, that's very interesting. And allow me to just go back to that LinkedIn bio, because I think there's also another paragraph that might help me formulate my next question. In that bio, you also say, "I believe capital is not enough. Infrastructure matters." And, we just discussed this. But then you say, "It is time to redesign what corporate-backed innovation can be." And, Level Up has this unique position within Hertz. This organization is partnering with business units to surface, signal, and accelerate traction. But I'm just curious, when you say redesign what corporate-backed innovation can be, you already shared us a bit about what CVC is, what type of structure are we talking about. But what do you mean when it comes to saying, redesign what this innovation can be? And how is this redesigning process taking place, do you think, within Level Up and Hertz?
Yeah. I mean, the truth is capital is far from being enough, right? Like founders need infrastructure and they need networks just as much as they need money, particularly the kinds of founders that we're investing in. And so, I like to think we're built differently at Level Up Ventures. We don't just like kind of write you a check or wire the funds and say good luck. we very much roll up our sleeves on the nuts and bolts of building a business, particularly those things that are most important, at the earliest stages of building a business. So, like go to market, financial modeling, sales motions, building a workflow around your systems. And again, because we're inside of Hearst, we can plug founders into all of these business units across industries, and I think that alone is incredibly helpful because if you think about where we invest, and we invest at the pre-seed and seed stage, our founders don't need me to be like an expert in chemistry or an expert in restaurant operations. What they do need help with is things like accounting, things like marketing, things like sales contracts. And so those are the kinds of things that we've kind of over time understood that they need, and we kind of have them at the ready when they come in. We can help them with that. So in practice, like what does that look like, right? One of the things that we've built is a scout network inside of Level Up. And so the scout network is made up of folks from across our 370 plus business units who have volunteered their time and their expertise to help support the startups. We have about 55 people in our scout network. And what that looks like is basically like surrounding founders with external mentors, sorry, who can really kind of help them to figure out problems in real time, who can help make introductions, as I was talking about before with networks. And then you've also got this external group of folks that we've built, which is our mentor network for people that maybe, for gaps that maybe we have internally. And those folks help them with the same thing. And so that way, our founders have access to expertise and support well beyond like the core team, the core Level Up team. And that really serves to accelerate traction because at the end of the day, that's what it is, right? Like you need to pick a fund or a firm that's going to have, be uniquely positioned to help you accelerate growth. And so I'm always thinking about that. How are we uniquely positioned as Hearst to help accelerate the growth of this company? And so that's really how we've thought about it. And that's how we've built, the platform.
And this platform focuses on entrepreneurs who are experiencing barriers when it comes to accessing capital, especially those that are solving the problems that they're experiencing or that they experienced before. But when we say entrepreneurs experiencing barriers when it comes to accessing capital, maybe it might not ring the best bell for a person listening this. So would you mind, defining that entrepreneurial persona a little? Like who are we talking about when we say entrepreneurs experiencing barriers accessing capital?
Yeah, yeah. So when I talk about, entrepreneurs who've experienced barriers to accessing capital, I'm talking about founders who kind of, despite building strong businesses, face systemic hurdles in raising money. And that includes Black, Latino, women founders, but it also includes older founders, immigrants, people building outside of the big, coastal hubs. Again, that 3% of venture financing, because that stat still blows my mind on a daily basis, right? 3% of all venture financing is going to some of these groups. And again, it's not because the talent isn't there. It's because of this pattern matching. And so when we talk about that group of people, that's exactly the folks that we're talking about, people who kind of just don't fit that archetype.
I think I have a lot of questions in this section of the conversation because I think overall we have this mainstream venture world, right? There are certain founder types that might be more, let's say, capital worthy, and there are certain colleges, schools, cities that we often associate more for some reason with venture capital, entrepreneurship, and all these things. So I'm just curious, you've been engaging with, people that are, I would say, often underlooked from, these mainstream venture world. And you probably realize there are certain things that mainstream venture world often misses because that initial perspective of, okay, this person maybe is not the best fit. Let's go and only fund people from Stanford, or maybe just focus on New Yorker founders or this or that, probably misses a lot of other change makers building fascinating things. So I'm just curious about the patterns you've been noticing among the founders that you've been supporting for years.
Yeah. I mean, I think first I would say, there's a reason why it matters if you're, ex Google or Stanford or Y Combinator, but it may not be the reason you think it is. In my mind, it is 100% the network. I mean, you and I both went to Columbia, right? And we know firsthand, like, to me, the biggest value of my Columbia degree is my network that I gained from being there. So there's value in that, certainly. It helps you to get to people that you need to get to faster. Sometimes you can say, I went to Stanford, grad school, and you can get in touch with somebody just because of that. So there is value in that. And, I don't want to dismiss that at all. But I do want to talk about those folks that you mentioned that we invest in, right? That maybe don't have that. Some of them do, not all of them do. For them, I think the value that they bring is kind of proximity to the problem, right? They're building companies around challenges by and large that they've lived themselves. And so they're super clear on what the problem is, what the insights are, what customers in that, really are looking for. And so that can be incredibly powerful. Second, and I mentioned this before, capital efficiency. These founders have learned to do with less, primarily because, I mean, they have no choice, right? A lot of times they have no choice. They've had to. And so that makes them very disciplined operators. And I think that's something particularly now as fundraising timelines have gotten longer and longer, right? It used to be that, we would tell founders raise like 12 to 18 months of financing of runway, and then you can be out in the market again. You know, the research now shows that it's taking, up to 2 years between pre-seed and seed, and even longer between seed and Series A. And so, you have to be very disciplined because at the earliest stages, it's all about like opportunity and runway. You cannot run out of cash. That's what you're looking for. And then in terms of these founders, I think the third thing that they bring to the table that maybe is a little bit different and valuable is market depth, right? Because they're often solving kind of like these high friction, high frequency problems in communities that kind of traditional venture hasn't paid attention to. They think, venture like thinks these markets are small, but it's really that they just aren't aware of those markets, or they haven't had exposure to it, right? Just because a market hasn't been paid attention to, that doesn't mean the market is small. And so when I talk about, kind of entrepreneurs facing barriers to capital, I'm not talking just about representation. I'm talking about all the economics that come along with it and all of the kind of value that's inherent in somebody growing up so close to a problem that they have experienced it, they've seen it, and they know how to fix that problem. And so I think, again, talking about, alpha and the funding gaps, it's the same thing. It's going after these founders who have found a problem that on the surface, maybe mainstream seems like a very small problem, but in reality is quite large.
I want to step back a little and come back to the, CVC concept that we discussed initially. I'm just curious, corporate world, let's, specifically focus on Hertz and its relationship with Level Up. Maybe I'm thinking, it could have been easier for Hertz to also follow the mainstream approach of, venture capital investing. So can you take a look at the CVC world, starting with your own organization, and there are all these other CVCs around as well. Do you think these organizations require a certain level of convincing to not follow the mainstream path? Or, how is that taking place in the corporate venture capital world to focus on those that are not receiving the opportunities as some others?
Yeah. No, I think that's a great question. It's interesting because Hearst is 137 years old. It is known as a media company started by William Randolph Hearst in the newspaper industry, but I have to say it is one of the most innovative companies I've worked at, which is probably not something people would think somebody would say about a company like Hearst, but it really is, right? They started diversifying outside of media back in the 90s and 2000s, right? This is why we have a massive healthcare business, transportation, financial services. And so I think that DNA is part of Hearst. And so, for them to kind of make this leap into this area, I don't think is as far fetched as maybe it may seem from the outside. In fact, one of our sister funds, I had mentioned we have 4 venture arms internally, is called Hearst Lab. That was started by Eve Burton and Lisa Burton. They are not just over, I think, a decade ago, and that was set up to invest in women-led businesses. So this DNA of Hearst has really been kind of the driving force behind many of these things. Hearst Lab being a great example of that. So Level Up Ventures wasn't actually the first time they dip their toe into this. Beyond that, what I would say is, listen, there are kind of two flavors of CVC, right? There's strategic and then there's financial. Strategic is when you only invest in those companies that operate in the same areas in which your parent company operates. And then you've got financial, where it's about financial return first and foremost, potentially sector agnostic. You don't necessarily, we are financial. But at the end of the day, all of them are in this to make return on investment. All of them, even if you are strategic, it's by nature of that. And just based on what I explained about kind of like the funding gaps, right? Statistically speaking, if only 3% of the billions and billions and billions of dollars that is going to venture to these startups is going to that group of people, just statistically, there's so much value there that's been untapped that it's, again, a good investment decision. It's a great investment case. And so, to any firms that maybe think that that is too narrow a lane, I would say, listen, you're missing out on some massive opportunity by ignoring that entire, kind of group of founders.
I also want to ask, Sashi, I think with this amazing work that you and your team have been doing, there obviously are cases where certain founders who were maybe having relatively more challenged experiences when it comes to accessing capital, manage to access to capital, thanks to level up, but also the challenge still goes on. And we know for a fact that there still are certain barriers still preventing underrepresented founders to access early stage capital. I'm just curious, when you take a look at today's world and the landscape, what are, some of the barriers that are still causing trouble?
Yeah, I mean, the number one barrier is still access, right? Too much capital still flows through kind of closed networks. And if you don't have the right connections, as we talked about before, you're invisible. I think the second is also bias. And people don't really like to say that out loud. But the truth is that bias isn't always explicit. Usually it's not. And most of the time it's subconscious, right? People aren't bad people. Sometimes you just don't know what you don't know, right? But unfortunately, I think that bias is kind of oftentimes embedded in how investors define what venture backable or venture scale looks like. And so those types of issues definitely remain. I think that second one, the impact of bias is enormous. And it's because it's not because talent is lacking. We said that before, but it's really because this system is not built to see these people. And by the way, that exclusion kind of compounds over time because entrepreneurship is one of the clearest pathways to wealth. For example, Black Americans who own businesses actually have a median net worth that's 12 times that of their non-business owning peers. And why does that matter? Why should you care? There's actually research that shows that closing the racial wealth gap could actually boost US GDP by $1.5 trillion, 1.5 trillion over the coming decade. So this isn't something that just impacts this small group of people. It's something that impacts the economy overall. So when you ask, how can we change this or how can, VCs maybe make the most impact, similar to how Level Up is trying to make an impact, I think it's really about widening that funnel, about sourcing outside of those same circles and only talking to those people who came to you through a warm intro. Be really transparent about your criteria. Give real feedback instead of just saying we're a pass. From day one, we were so focused on always letting founders know why we are passing. And it was very uncomfortable in the beginning to write some of those emails. Now it's become a lot easier to do. But we will always tell you, we were not comfortable with this, and this. Or, even sometimes we've said we don't think that the CEO has the right background for this company and we just couldn't get there, right? But I can't tell you how many times from a past email I got a founder writing back and saying, thank you so much for the past email, because we finally told them something that probably came up in multiple discussions, and then they just got a pass and they had no idea why. And these aren't, this is not a radical change. We're not doing anything crazy, but I do think that changes outcomes over time. Because, when you kind of give people real feedback, when you're doing this very earnestly, right, you're not just doing the right thing. I mean, you're capturing opportunities that everyone else is missing. I can tell you that we have passed on founders who have taken that feedback and come back a year later, and we've ended up investing. It's happened, I would say, maybe about a third of the time. And so, when I talk about kind of capital not being kind of the ending point, but more the starting point, that's kind of the way I think about it. And I think that can make a huge difference. I know it can make
Love
a huge
it.
difference. I've seen it.
It probably is super hard for you or any person at your position to sometimes say that to an entrepreneur at the very early stages.
Like that's the other thing. Like being a former founder myself, that's what I would have wanted. I just wanted somebody to tell me, you're doing this wrong, or, people want to hear this. Like I think that has been incredibly helpful actually for me sitting on this type side of the table, because I kind of think about like what would I have really benefited from.
It also is like a statement, I think, Sashi, that you say, I care. I think, all these things just show probably to the entrepreneurs as well that how much, you care as you put your support and dedication towards their journeys. I want to take you to 6 years ago. And, I mentioned this at the early stages of this podcast that Project 2.8 of Columbia University is our connection point.
It is.
And I've been volunteering for this beautiful organization for almost 3 years now. It's been a powerful platform for female founders. 2 weeks ago, we started our current cohort. So this past Saturday, we had a workshop. Yesterday, we had another session. But 6 years ago, Sashi, you founded this accelerator. Why?
Yeah. So we founded it 2020 during the pandemic, and it was really because a lot of female founders felt isolated. I was part of the leadership team for CVC, Columbia Venture Community, and I would have a lot of women come up to me and say, I'd love to stay, but I have to run home and relieve the nanny, right? Or, it's just true. Like women oftentimes are responsible for a lot of the housework, even if they work outside of the home, right? And a lot of the care, et cetera. And so it would fall on their shoulders. So it was a practicality thing in one respect. Like I remember we were doing this survey to try and figure out, we had all of these different programs in CBC, and like women representation was quite low. And that's what they would say to us, right? They would say, like, I'd love to like hang out for happy hour, but I gotta go. Or, I attended one of the more like intimate gatherings where people would get up and talk about their startup and get real time feedback. They'd feel uncomfortable. Like they felt like kind of drowned out from people who were maybe a little more aggressive or a little more comfortable with just getting up and kind of domineering over the entire conversation. Obviously, that can both be men and women, but that's the feedback we were getting. And so in founding Project 2.8, it was really about kind of providing a safe space. And I know that that's not something people say anymore, but that's exactly what we were doing, where we could provide these women with like the mentorship and the support and the community that they weren't getting elsewhere. And I think, after that first year, we saw the women who participated in Project 2.8 walk away not just with kind of tactical skill. Like we taught them how to pitch and structure a cap table, but like with a true network of peers that they can lean on. And it was awesome. I mean, I remember that there were women who would like have their baby in their arms as they were like doing the sessions online, and it just made me so happy. And honestly, I still run. That's 5 years ago, right? Like I still run into founders from cohort one. Cohort two, I've actually ran into a founder from cohort three yesterday at a conference, and into these women, and they're all still connected. They all still talk to each other, because the truth is that fundraising and having a business is really lonely. And you might have a partner, you might tell them about it, but they're not going to get it. They are not going to understand that those very, very high highs and those very low lows. And so having this tribe around you really makes all the difference in the world. It's just people that can relate to what you're going through. And so ultimately, I think like the biggest offshoot of that or result of that was like these women didn't feel like outliers anymore, right? They see themselves as part of the pipeline, and that visibility matters. And, I believe even this year's cohort, some of those alumni have come back. And that's so powerful for the people in the cohort, because they see peers who have succeeded, right? And that way, it's possible for you too. And I think that ripple effect is real. It's one of the most powerful things in my opinion about the program.
Especially this year, 2 years ago as well, some of the workshops were given by, previous cohort members. And they were part of the cohort. Maybe their startup was just a website.
Yeah.
Couple of years on, now these people are joining the workshops and changing, their roles are changed, and they're explaining to new founders how struggleful it might be to raise capital early on, but how they did it repeatedly and how they are, nailing all the other goals. And I think that aspect is really valuable. I totally echo what you say.
Yeah. No, no, it's pretty awesome. And I'm thrilled to hear that it's happening again this cohort.
Sashi, thank you so much for your time. We started with your journey, jumped to Level Up, Hertz, and then ended up with a section on Project 2.8. But I think, the underlying goals of Project 2.8 are not actually that different than Level Up or Hertz mission. And I'm just, I wanna end with a more of a positive note because what I've been hearing, for more than 5 years, you've been supporting founders that are having, challenges to access capital or supporting founders that were maybe neglected by the mainstream venture in some shape or form. And I bet, and I'm pretty sure that, you've been seeing some meaningful changes within the organizations you founded, within the organizations you supported. And I'm just curious, if you could tell me a couple of those meaningful changes that you've been observing in some of the founders' journeys that, you and the organizations you've been part of are touching.
Yeah, I mean, well, first of all, it's very much the case, just as you said. It's not just me. It's the teams I've worked with, the people I work with. The Level Up team is really passionate about the work we do. I know Project 2.8 has kind of gone through different leaders. I know we have a new leader, Nana, yeah, this year. But I think the thread that goes through all of this is that there are people who really genuinely want to make a difference. This isn't charity. This isn't any of those things. Recognition of the fact that we can have, a level playing field, that we can give everybody access and equal access to the same opportunities, and we're all better off. This is not, there's enough to go around for everyone, right? This isn't a winner takes all kind of thing. And so I've just been I've been very lucky, honestly. I've been so blessed to kind of come across these opportunities and the people who kind of, want to see the same things. I mean, I think it's just been such an amazing journey. I've been so blessed to be part of it. I've been really just, I don't know how many people can say that they love their jobs, right? The jobs that you need to have to pay your mortgage, to pay to pay for everyday things. Like, it's not often that you can say you're so blessed to have the job that you have and do the work you do. And that's very much how I feel. And so for me, it's really, it's a blessing for me. And I'm just so glad that, hopefully we're making a little bit of a difference and giving access to people and giving them some opportunity that maybe they didn't have before.
Sashi, thank you so much for joining me today. It was a pleasure to, listen you answer all these questions. Looking forward to hopefully, host you in Istanbul one day.
Listen, you do not have to ask me twice. I will be there. Orçun, I wish you the best of luck in this next phase of your journey. Safe travels. And thank you so much for not just this interview, but for everything you do. You've been such a passionate supporter of Project 2.8, and in the women, in the, who participated. And really, thank you so much.
Thank you, Sashi. Have a good one.
You too. Take care. Bye bye.